Nuburu Inc., ticker BURU, is currently trading live at $0.51 a share, marking a substantial intraday climb of 7.74%. Now, when most people see a sub-dollar stock make a move like this, the immediate assumption is pure retail speculation or fleeting momentum, a classic penny stock flutter that's here today and gone tomorrow. But the truth of what's happening with Nuburu is far more specific and deeply rooted in a technological niche that the broader market has largely misunderstood. This isn't just random volatility, it's the market slowly waking up to the critical importance of industrial blue laser technology in a world rapidly shifting towards electrification. The disconnect between the expectation of this being another failing post-SPAC company and the reality of its proprietary technology's role in the future of manufacturing is where the real story lies. The common market narrative surrounding Nuburu has been overwhelmingly negative, and for some understandable reasons. The company went public via a SPAC merger, a path that has left a trail of underperforming and often overhyped businesses. Since its debut, the stock has suffered a precipitous decline, faced delisting warnings from the NYSE, and has been battling significant cash burn. To the casual observer, it fits the profile of a company in a precarious financial state, a high-risk gamble that most would prudently avoid. Investors on platforms like Fidelity or Interactive Brokers, who have access to deep analytics, might see the red flags in the balance sheet and dismiss it outright. But this surface-level view, while not incorrect, is incomplete. It fails to appreciate the strategic value of what Nuburu actually produces. The expectation is financial distress and imminent failure. The reality is that Nuburu is one of the very few companies in the world that has mastered high-power blue laser technology, a tool that is becoming absolutely essential for welding copper and other highly reflective metals. This isn't a nice-to-have technology. For efficiently manufacturing the battery packs that power electric vehicles, it is a foundational requirement. Looking at today's 7.74% surge, the trading volume is a key indicator. It's elevated but not explosive, suggesting this isn't a purely meme-driven frenzy. Instead, it points to a more considered accumulation of shares, perhaps by investors who are connecting the dots between the global push for EV production and the manufacturing bottlenecks that companies like Nuburu can solve. The stock's movement isn't happening in a vacuum. It's occurring alongside major announcements from automakers about expanding battery production facilities. Every new gigafactory that gets announced is a potential new customer for Nuburu's technology. While shares of a titan like Tesla stock react to vehicle delivery numbers and broad market sentiment, a micro-cap supplier like Nuburu moves on the perception of its ability to embed itself into that very supply chain. The difficulty in welding copper with traditional infrared lasers is a well-known engineering problem. The material is so reflective that it simply bounces most of the laser's energy away. Nuburu's blue lasers operate at a wavelength that copper absorbs with extreme efficiency, resulting in stronger, faster, and spatter-free welds. This technical superiority is the core of the company's value proposition. So while some traders on the Robinhood app might be chasing the percentage gain, a smaller, more informed group is likely positioning based on this technological moat. The company's most recent financial reports continue to paint a challenging picture. Revenue is growing, but so are net losses, as the company invests in scaling its operations and research. This is the classic struggle for a hardware technology company, the need for significant capital expenditure up front to capture a future market. The market's reaction to their latest earnings was muted, as the numbers confirmed the ongoing cash burn. However, the commentary from management likely planted the seeds for the optimism we're seeing today. They emphasized progress in customer evaluations and a growing pipeline of potential orders within the e-mobility and energy storage sectors. For a company of this size, a single significant contract win could completely alter its financial trajectory and validate its business model. This is the inflection point that long-term investors are looking for. They understand that self-investing in emerging technology requires patience through periods of financial strain. The goal isn't to chase small daily pops, but to identify a company before it secures the transformative deal that forces the entire market to reevaluate its worth. So, what does Nuburu Inc. actually do? In the simplest terms, it designs and manufactures industrial lasers that emit a powerful blue light. Founded on pioneering research, the company has developed a portfolio of patents around this technology. Its business model involves selling these laser systems directly to manufacturers in key industries. The primary target market is battery production for electric vehicles, where copper is a key component in battery foils and bus bars. Other applications include welding components for consumer electronics and specialized defense applications. The history of the company is one of brilliant science meeting the harsh realities of commercialization. The SPAC deal was intended to provide the capital necessary to scale, but the subsequent market downturn and rising interest rates made for an exceptionally difficult operating environment. This history of struggle is what keeps the stock price suppressed, creating the wide gap between its current valuation and its potential if its technology becomes the industry standard. This is a classic case where an investor using a platform like SoFi Invest might see a high-risk, high-reward scenario that fits a more aggressive growth portfolio. Given the critical role of copper welding in battery manufacturing, what do you think is the biggest hurdle for Nuburu in landing a contract with a major EV maker? Comment your thoughts below. Looking ahead, the future of Nuburu hinges on a few key catalysts. The most significant would be the announcement of a large-scale order from a major automaker or battery manufacturer. Such a deal would serve as powerful validation and likely provide the capital injection needed to stabilize the company's finances. Continued technological advancements, such as increasing the power and efficiency of their lasers, would further solidify their competitive advantage. Conversely, the risks are stark and very real. The primary risk is liquidity. The company's cash runway is limited, and its ability to raise additional funds in the current market climate without significant shareholder dilution is a major concern. Competition is another factor. While Nuburu has a head start in blue laser technology, larger, better capitalized competitors in the industrial laser space are undoubtedly working on similar solutions. A failure to execute on their production ramp-up or a slowdown in the adoption of EVs could also severely hamper their growth prospects. The bullish scenario sees Nuburu becoming a critical supplier in the global electrification supply chain, with its stock price reflecting that essential role. The bearish scenario involves the company succumbing to its financial pressures before its technology can achieve widespread commercial adoption. This is the fundamental tension that defines the investment thesis for Nuburu right now. Many investing sites and robo-advisors like Schwab Intelligent Portfolios would likely screen out a stock with this risk profile, making it a choice for investors willing to do their own deep research and accept the associated volatility. In summary, the 7.74% intraday rise in Nuburu Inc. stock is more than just a flicker of market noise. It's a signal that a segment of the market is beginning to look beyond the glaring financial risks and appreciate the profound strategic importance of its core blue laser technology. The prevailing expectation has been that Nuburu is just another microcap company on the brink of failure. But the underlying reality is a company holding a potentially indispensable tool for the future of manufacturing, particularly in the booming EV and battery sectors. The journey from a struggling post-SPAC entity to a key industrial supplier is fraught with peril, primarily centered on its ability to manage cash and secure game-changing contracts. The story of Nuburu is a powerful lesson in looking past the obvious narrative. Whether it can successfully bridge the gap between its scientific innovation and commercial viability remains to be seen. But for now, it stands as a compelling example of how a disruptive technology can create deep value, even when hidden behind a wall of market skepticism and financial uncertainty. The coming quarters will be decisive in determining whether today's optimism is the start of a genuine re-rating or simply another false dawn. This video is for educational and informational purposes only. It is not financial or investment advice. Always do your own research and consult a qualified financial advisor before making any investment decisions. Thumbs up. Don't forget to like, comment, share, and subscribe for more